Hi, this is Randy Finney with Right Side of the Chart, and this is a late session or mid-ish session update for Tuesday, February 14th, 2024. I'll be quick on this one because there's not a lot to update. I'll go ahead and answer or go over a couple of comments that were posted today, requests for an update on natural gas, and then another comment about the market, and I'll share my reply to that, my thoughts. Just to kind of recap, yesterday we had the sell signals we were waiting for and a break of the trend lines, the minor trend lines. This is SPY, and we hit our initial target, which is and still will trigger the next more significant longer term trend slash swings trade signal. And we closed right on those trend lines yesterday. This is SPY right here. So this is pretty much what to expect today. Remember, the most important thing, and this is that was here. Let me get to the comment here. Somebody asked in the post today, QQQ approaching long-term, I think meant long-term trend line. I would assume, based on all the chatter about divergence, if it breaks below yesterday's whipsaw low, that could actually be considered an all-in moment for the bears. Well, yeah, pretty much. That's what I said in yesterday's video, and I'm going to get to that again. There were towards the end of the video, I summarized. I said, let's keep it very simple. We need to see really four things. We need to see the trend lines clearly get taken out on SPY and QQQ. And that means all the better on a solid daily closing basis, but a big intraday break. But even then, because we had punched through them, remember at the open, a slight undercut, at least on SPY and a little bit on QQQ. And so during that video, I said pretty much now it's a break of yesterday's lows. And that's what it remains, as well as there's two of the Mag 7 I want to see, as I mentioned in there, and that's Meta and Amazon. I'll get to those in a second. As I said, I also want to see them take out their lows and clearly get into the gap because they punched into there. Everything just had that brief Momo-fueled post-opening. Remember, when the market opens on just about any given day, but especially when there's a lot of potential market-moving news, whether it's an economic report, a Fed meeting, and stocks when they report earnings, and pretty much every day, but to a greater or lesser extent, you have order imbalances. Remember, futures are trading around the clocks. People are always getting in there. But on the stock market, when the opening bell rings, and that's why when you look at a chart of volume, you can see SPY. Any given day, a normal day, volume looks like a smiley face when you go to a daily chart. You can see it. You can go to intraday chart. Here's SPY. I think you can see my volume bars. They're kind of muted down. But you always get that surge at the open, tapers off around lunchtime. This is if this was a curving tool, try to imagine I'm curving that like a smiley face. And then volume ticks up and really ramps up at the close and open. So every day that's your typical volume pattern, almost without fail. And so what those are order imbalances at the open because, you have all the stop orders getting hit, people buying, selling, and then things kind of stabilize from there. And so the takeaway is on that, by the way, when you're trading, at least me, if I have a position, let's say, on any trade, my goal is to hit my profit target and not be stopped out. So if I'm very close and I'm in front of my desk, and let's say, for example, it's, whatever, this is just SPY. I was actually short that, or I was short the small caps in the NASDAQ 100, not SPY, but point being the indexes. So what you can do is sometimes, if you can see in pre-market, again, if you're trading stocks and you can see that it's close to your stop, you could temporarily pull that. It's usually the first 30 minutes of trading, you get kind of one way or another and then a reversal. Not always, but quite often, the first 30 minutes of trading up to an hour, and then, things go the other way. So we gapped up today, so the markets followed on through. Yesterday we gapped down, they kept going lower, then reversed. Okay, so that's just kind of a takeaway, and what you see with volume spiking up in the beginning of the day, tapering off midday, and then picking back up into the close. So there's SPY, QQQ. Again, no update, perfect tag, or minor trend line. This is just my clean board, I call it. This is where we were short. Even intraday, we got the short, on the 60-minute chart with the solid 60-minute candle. I'm looking at a daily chart here. And so that's it. So we hit support. We hit closed on those major trend lines yesterday. And as I said before and talked about in the video. Even before the video, I got out a post out to you about the economic calendar, and that's everything. So this is the economic calendar. Remember, and this is what we're watching for now. This is so my reply to somebody was, hey, today is a nothing day. You can see there's nothing here, zero, anything that's, they put the stars by potential important reports. And this is just the crude oil, petroleum status report. But that's not a stock market moving report. If you're a crude trader, you need to know when crude has these weekly reports, nat gas inventories and things like that. They come out every week. But these are the big, obviously CPI did it. In fact, I don't know the stats on the S&P or the NASDAQ 100, but I did read in Barron's that it was the worst day in the Dow since March of 2023. That's almost a year ago. And so, again, we use technical analysis. We're in almost right off the top. We got those sell signals early on, and we caught all that. And again, it was posted. That was an opportunity if you wanted to, it was the first target. You could have covered. You could have gained the bounce. Or if you're swing trading and you took that as an initial position, you can obviously hold on to a short position. I'm going to talk on that real quick. I'll show you where, you can consider stops. But again, there's nothing today. I haven't even been in front of my desk most of the day. I've been doing other things. Got that post out to you earlier. Today is one of those grind days you're going to get. We closed on support yesterday with the biggest drop in almost a year in a bull trend, and nothing to really economically, no big earnings or anything to really move the market today. So this is kind of what to expect. Now, as I said yesterday, or on Monday, this is where it gets really thick. So the CPI obviously rattled the bulls. It rattled that whole Goldilocks bull case. We're going to get rate cuts with a strong economy and good unemployment, and that kind of was a little check right there. And so I don't have a prediction. I certainly expect the job market to roll over sooner at some point this year. I still think we're going to have the start of a very strong recession. It's going to be a much different recession. I've been talking about this for a while than most people even expect. One that's not going to be just a quick one and done and over before we know it. I don't cover this every day, but there's so many leading economic indicators. So many. Let's see. I might have one up or two up here. Yeah, here's one from the conference board. These are leading indexes. You can read all about it. This is from conference-board.org. And again, there's so many out there. Let me close this little box here. But you can see the LEI leading index indicator, and it remains deeply negative. I think you can see it in this thing here. I really wasn't planning to pull this one up, but I remember I had this up from the other day. I mean, look at that. And it's, again, these things, if you don't know what that is, leading indicators are indicators that give you a forward notice of before the economy turns, whether it's after in a recession, they're turning up. You look at the leading indicators. Just so you know, employment is a coincident indicator, just like consumer sentiment. Everybody's happy and bullish and feels good and spends money when the stock market's going up because their 401k is going up. And likewise when it goes down. So you have very little, I've always found very little, if any predictive value in coincident indicators. And employment is one of those. And it's almost always, if not always, the last thing to buckle. By the time you start seeing it turn, and history shows, and I've gone over that chart in the past, I've pulled up employment charts, it stays low where it's at now, right at record lows. It kind of hits that level, stays there a little, and then turns quickly. And it's usually a stark and clear trend up. So all I'm trying to say is once that starts to happen, then it's almost, from the levels we're at now, and again, one day doesn't make a trend, 1 week doesn't make a trend, but I'm watching that closely. And we have those reports coming out tomorrow. I'll get to that in 1 second. But here it is. So you can see this huge drop. And here it is. This one shows you right here, despite a recent upswing in its 6-month growth rate, the U.S. LEI continues to signal a recession. And guys, I've showed chart after chart. This is fundamental analysis, what we're looking at here. And you can see this is the leading economic index going down, down, down. These gray areas right here, I think you can see them. are recessions, and you can see it going down, and then the recessions follow. And there was the COVID recession. It was over before we knew it because the government's, pulled out the nuclear option. And this is this is pretty clear where we're going. And you can see they put a little red line where you get to that level, and without fail, there's been a recession. Same thing with the Treasury yield curve. It's not the inversion; it's the uninversion. And again, I didn't want this to be a long video, but this is saying the same thing. A recession is pretty much and it's amazing because a lot of seemingly intelligent people come out on mainstream media and they tell you no recession, we're gonna have a good year, Goldilocks scenario. Most people even taking off the soft landing off the table and calling it no landing. Anyways, you guys can look these things up. They're on there. Do some research. Look at there's different leading indicators out there. Let's go back to this. So that was my reply. There's quite a few potential market moving economic releases tomorrow morning. Most of them come in the big ones are usually at 8:30 a.m., but there's some around 10 a.m. Sometimes you get some of these released at 10. And so if we're going to get a solid break below the October trend lines and send Meta and Amazon back down into those big gaps, that can certainly be the catalyst. I don't know if it will be. All I can tell you definitively right now is the index has hit a very significant uptrend line, which is support yesterday, and they're above it today. They bounced, had an initial bounce yesterday. They're bouncing again today. But this is going to make or break it. So this is kind of the takeaway I want to give you in the video. Tomorrow has the potential. And I went on to say, because all those big releases, and there's nothing on the calendar today, again, that this, the sideways flattish actions, most likely that's what you're going to get. This is just, we're consolidating. Market's hardly up. It's flat. It's up 0.5%. But I do believe tomorrow the market will likely be up or down 2% or more. I'm leaning towards in position for the latter. To me, it's worth it to be into positioned ahead of it. It's also, with futures you can maneuver out. Now again, nothing big is going to happen unless there's some outside event between now and tomorrow morning. So at 8:30 tomorrow, the fireworks begin. So you might want to, watch, see what's going on in the pre-market. And then sometimes you get an initial reaction one way or the other. But then at 9:30 when the opening bell rings, the market can go the other way. So here's the thing. Again, if those trend lines are going to break soon, tomorrow has very, very much has a potential to do that. And that goes the other way too. If the market likes what they hear, we may rally off those trend lines. So let's get back to that real quick, and then I'll get to these other questions here. So there it is. That's it. QQQ. What I can tell you, so I can't guarantee what's going to happen tomorrow. I can tell you what I think is going to happen. I think these trend lines are looking ripe for a breakdown. But what I can guarantee you is we're still above the trend line right now, and that if we have another rally off there, make a new high, again, if it's anytime soon, as in tomorrow, this week, anytime soon, what I can guarantee you is it will be a divergent high because these indicators are still lagging. In other words, we have very clear negative divergence that's not at any risk anytime soon of being taken out. So will not change the technical posture nor the outlook for me. It just means I'll watch those unless we don't have divergences anymore. We'll still be overbought. Doesn't mean just the divergences get taken out, I just automatically buy. No, then at that point, wait for a pullback to support. Wait for an objective entry. Break divergences. Whether they're negated or in place or confirmed, they're not buy or sell signals. They're just indications that the momentum is waning and trend reversal is likely. And we're sitting right on the line, so we're in close proximity. The fact that we're basically right above that trend line means it could be taken out easily in one day. If we were way up here, and again, that's why that was a first target. And that's why I did cover there yesterday on that initial tag there, because you dropped, that was, again, the biggest drop in almost a year in a strong bull trend. The odds I would put it close to zero based on just a slightly hot CPI that you're going to drop over 3% and keep going down through there. No. So that's it. Now we're in close proximity. So now a 2-3% down day would clearly has the potential, guys, to clearly take that out, as it does to clearly move us comfortably away from there for the bull case. So the market wants to rally, then what are your options? What's your trading plan? Let's talk about that. On QQQ, let's go back to that clean board here real quick. We'll zoom in. This is a daily chart. We'll just stick on this one. So there's yesterday's the top of the gap. So that's certainly an objective short entry there. If it gets taken out, then that one technical event is net bullish. Doesn't mean we're going to the moon, but it could certainly open the door for more upside unless it's just a brief whipsaw. So I just want to highlight the level. So you have the gap right here and the top of the gap, and then a back test of the trend line, because that's resistance. So it's support when you're above a trend line, and then once you break it, the support once broken becomes resistance. Anything much above that, then you're at new highs, so there is no resistance. So just shorting is just random. The only kind of sell signal you'd have at that point if we make new highs, other than coming back down, taking out the trend line after that, would be some type of bearish reversal pattern. But again, I look at everything collectively. I just gave you levels on QQQ, simple stuff. And there's a gap right here. You can see it pretty clear. I'm gonna leave it right there. About 435 or so. There's the trend line. And then QQQ daily. And SPY, let me just make sure I've got everything here. There, SPY, same thing, right on the trend line. 60-minute chart in SPY. Let me put up a line right there at the gap. So I watch these two together, even if I'm only trading one or the other. I want to see, like I said in yesterday's video, basically a break of yesterday's lows in both SPY and QQQ will do the trick, because it's going to take out. Remember, SPY also had price support there, at 491.80 when it hit, and that's why we had a little whipsaw down through there. And I'm going to tweak this trend line just because I know I can see when I zoom in real closely. Watch, you can see a little bit of a candlestick shadow right there, and one that I missed there. And again, these trend lines, I call it trend line drift on this charting program. They tend to move a little bit. Okay, that's a little bit better fit. Now I'm right on the bottom of that candle and close enough to that one. So again, I've said this many times, if you have to squint to see, especially in a strong uptrend or a strong downtrend, don't force it. Wait for your signal. And again, so that's why, it was a bounce trade there yesterday for active traders. And that's it. So to keep it very simple, as just like I wrapped up at the end of yesterday's video, a break of yesterday's lows in QQQ as well as SPY. We're looking at SPY here on a 60-minute chart. There's QQQ right there. And then Meta and Amazon, which I told you I'd put price alerts on. They both have these, what I call mega gaps, these potential exhaustion gaps on Meta. It came yesterday. Here's the bottom of it. You can see that's really nice support, about 454, give or take. And remember, guys, this is a right now, $470 security. So, 1% move on that is, over 4 points. It's not, you got to give it a little bit of, it's not like a $4.50 stock or a $45 stock. So, but you can see it clearly. And again, so tomorrow or next week or next month, if and when it comes, that would be what I want to see to get, aggressively short and to add to swing short positions. And that would be a solid break. And again, it's above yesterday's lows, which is also the same support it's been hitting. So Meta hit this support. It's been dancing on 454, which is the bottom of the gap. And then odds are, if you solidly enter that gap, odds are you're going to backfill it. And that's a monster gap, as I mentioned, from where we're trading right now, just to backfill the gap and to get to that trend line, which is my price target. It's a dual level, about 15% drop. Let me put the right there. You can look. Sometimes you can say technically on a red candle, it means we closed at the bottom of it. So it's technically where the gap is. But when I see candle, I like to put them at the high part of the candle. get in a little early. If you're going to short something, or you're looking to buy the dip, whether you're bullish, bearish, shorting it, and or bullish, waiting for Meta to pull back, backfill that gap. If all eyes are looking at, the very bottom of it right there, let's say 394, I'm not going to hold out for a fraction of 1%. I'm going to cover my short a little bit above where I think everyone else is going to step in. Likewise, if I want to go long, I'd rather be long a little bit early. I've done this many times, because what happens if not, you're holding out for that fraction of 1%. You may miss the darn thing and then say, damn it, I meant to buy it there at 398 and it hit 398.50, so I don't, again, I'm pretty precise on my trades. Probably know that, compared to like most folks will give you a price target on Meta of, with no time frame, no, just kind of a rough target, which my targets are, a lot more precise. This is my trading style. That's why I'm, often covering these intraday charts, and, entries and exits are usually within, well within 1% of where my final target was, or my entry point or pullback, or whatever it was. And so that's it. I just want to point out it's beautiful level too. And again, we may not look, here's how it works. I've just spent the last couple minutes talking about Meta backfilling this gap. No sell signal, no trade. It's, you can take it as a pure play trade idea, but I'm primarily highlighting it for what I want to see to solidify a more significant longer-term swing short sell signal in the stock market, particularly big tech and the S&P 500. The AMZN are top holdings in the S&P as well. They just have a not as heavy a weighting as the NASDAQ 100. So that's it. Let's not spend much more time. And if this is just an if the market really doesn't like what the economic calendar is selling tomorrow morning, especially the 8:30 reports, and we get a big slide in the futures and watch Meta, and Meta gaps down below 454, then that has a potential to put in an island cluster top. And that is one of my favorite. And we already have a potential exhaustion gap. We can't call it that yet because we need to see the reversal come. Only time will really tell. It fits the mold of it. But an island cluster top is when, this is the daily chart, when you have a cluster of candles separated by gaps on both sides. So again, something to look for. And more so, a trading idea. I'm not just giving you analysis. I love these island cluster tops or island tops. An island top is when there's only one candle and that's surrounded by gaps on both sides. But it's an easy, very easy, simple pattern to trade. And I love it because it has a phenomenal RR, risk-reward ratio. Okay, so, and that would be, so for example, let's say you gap down here. Let's just say it's come down here around 442, 443. There's that opening gap. You short it there, and your stop on an island cluster top, it's simple. It's above the top of the island, because if it goes back up, it is no longer an island cluster top reversal pattern. So it needs to have that gap on both sides. I like to give it a little room to the top. You could have a tighter stop if you want. I wouldn't put it right at the very bottom of the island, maybe the midpoint. Again, that's up to you, but I'm going to just kind of measure it out here. So 442.72 right there. I'm just where my crosshairs are. Say that's the gap. And then your stop is above the top of it, about 483. If you look at the pop-up box on the left, that's about a 9% loss if stopped out. My target, the next swing target would be that I'll probably revamp these. This is from the previous, when it broke down back here and we hit T1. T1 was 275. That alone right there is a 38% drop. And I can tell you, based on the scope of this pattern, that would once again be my target. In other words, we had a sell signal here, a breakdown and back test on Meta, hit that first target. But if you recall, towards the end of the year, it was on the AMZN, on all of them, I gave you these purple levels, and I was very adamant, until and unless they break, you do not, there's no reason to be aggressively short. There's no swing or trend short. We're not going to go to my deeper targets until those purple lines get taken out. And not only that, when they all got hit, that's when I said cover shorts and go long. So we were long off those levels because they were key support. You have the 200 days right there with them, right below them. So there's a lot there, and there's a lot of reasons why. I think if we get that island cluster top, and then your next sell signal, let's say you only don't want to take a partial position on Meta, your next sell signal, and I don't want to say even more powerful, but a very powerful one would be a break of the primary trend line. That's off the October of 2022 lows. Remember, lately I've been talking about the October 2023 kind of nearer term trend lines, intermediate term trend lines on QQQ and SPY. But this is the bull market or bear market rally, whatever you want to call it, trend line off Meta, and that would give you a more powerful sell signal and also open the door to my additional targets from back then, which are still, again, I may revamp these targets if you want Meta, and let me know. Put it in the comment section. I'm not trading Meta individually. At some point, maybe I'll take a position. I don't know. First of all, we don't have any sell signals now. But if you want to trade the stock, maybe you're an options trader, don't ask me what contract, because that's not my thing. I prefer trading futures, ETFs, and shares. I have plenty of experience in options that I've learned over time, and I often say this, but it bears repeating. It's hard enough. It's one thing to get the call correct on where a security is going. So I might be, telling you that and I've been saying for a while, I believe Meta's going a lot lower when I look at the weekly chart, but even in 2023, I think it's coming back down, or 2024 down to here. And I've been saying that since back here. Now, the problem is timing on that. So if you had puts, let's say, well, guess what? Those puts probably already expired, worthless by now. And so what I often say, it's one thing to call where a security is going, and it brings in a whole other magnitude of difficulty to say when it's going to get there. And that's why I don't like options. And again, folks use them paired trades with less, if you're just buying raw puts and calls, that's the most aggressive, and that's where you got to watch it. So, if you know your stuff, again, if you're an options trader and you know what you're doing with paired trades and all that, let me know, and I'll be glad to give you an update on Meta and revamp those targets. Enough time on that one. The other one was Amazon, because it also had a big post-earnings gap. And by the way, Meta and Amazon, when I go to the weekly chart, remember, this is a big part of my analysis. These big weekly divergences not seen since back here when the stock fell, whatever it was at the top, and we were, short. It was one of my favorites on the long side here and here. Covering that both times. Couple trades off there. Those were long-term targets on. Where'd they go? I must have had another board here, or the support levels I highlighted. Thought I had okay, maybe it's on a different board. I've got a gazillion different boards here. But either way, I clearly remember there, and there. And Amazon and Apple were actually, and that was right in the beginning of 2023. Those were my two top picks. And going long and with the NASDAQ 100 expected to outperform, which it did. Now, my point here is, again, not to kind of tout that, but to say this is the same or at least similar technical posture, and just like we had back here. And the only other time we had a big divergent high on the weekly was back in 2018, and the stock fell 36%. And it was also predicted at the time, the charts, these notes come back there, back on, when it was down here and it only dropped 31%, I figured there was more to come. And yes, there was 36% drop. So that's it. And I know it's hard to see when things are going up. They look like they'll go up forever. And again, right now, most importantly, I'll talk about this all day long. Been talking about it. And there's a swing target down here, this uptrend line off the October lows. So this is how I'd see when we get the sell signal on Amazon. But I have to repeat myself so often because some folks don't seem to hear this. There is no sell signal on Amazon right now, and that's what I'm waiting for. I'm waiting for a break, as I said in the video yesterday, of both Meta and Amazon below yesterday's lows, because they both, or at least Amazon, punched ever so briefly in that opening imbalance into the gap right there, but immediately got snatched up and put back on there. And so now, to play it safe, you want to wait for that reaction low to get taken out, and then you have a big old, not as big as Meta, but a nice size gap. Let me just put a line here. There's the top of the gap, the top of that green candle. It was their earnings gap. And that in itself, by the way, if that gap is backfilled, would be not as much, but a 6% drop. And the probability of the NASDAQ 100 going up with Amazon dropping 6%, especially if Meta drops at 15 or plus, is almost zero. These guys, it's not that the other ones can't go up, but there's just high correlations. Everything's, computerized trading. They're either, buying the Qs or selling the Qs, and usually these stocks move up and down together. You guys know that. So, anywho, that's it. Those are the things I'm watching for. And most importantly, no sell signal, no reason to add to or initiate shorts. If you covered yesterday on the quick pullback, an active trade, whether you want to get in front of it or not, if you trade shares, meaning individual stocks instead of futures, you have that kind of tough call. If you want to wait till 8:30, things are going to rip up or down one way or the other. It's just hard. It's hard to buy. You have to use limit orders to buy and sell in pre-market. You got to wait till the opening bell at 9:30 to use market orders. And again, if we get the breakdowns, now what could happen is, at 8:30, the markets can move and the futures can start dropping. And by the time 9:30 rolls around, you may not have an objective entry. Now, look, again, things could explode higher. And then what you do is you just don't short, or you don't add to shorts unless we break those. Again, these are the next sell signals. But, there's a possibility if the economic reports, the market really doesn't like what they're selling, then you could gap down. And to me, I don't chase. I'll take a breakdown, but I won't buy in no man's land. No man's land, it's like, if you're a tennis player, you don't play the middle of the court. They call that no man's land. You either play the net or you play back. And a gap right there is no man's land is it's a term I came up with for when a stock is smack between support and resistance. And the reason I don't like to enter no man's land is if a gap down, there's a good chance they'll rally back up. The dip buyers, Pavlov's dogs, they're certainly coming out today. The bell rang. We've had a biggest drop, as I said, in almost a year. So that's why we got the initial bounce yesterday, too, off that level. They'll probably buy it up. But maybe not. That's the thing. But if they do, I would rather wait. If I missed it, let's just say I wanted to short Amazon, but I didn't want to gamble and get in front of the earnings report or the breakdown. And then it does gap down halfway. Then I would just wait patiently for a kickback. Not all the way, but close to 167.50. And I may not get it. And that's the thing with trades. Over the years, if I tell you how many trades I was waiting for, even some really nice looking ones, but I just didn't have the right opportunities, no big deal. Pass. There's always another trade right around the corner. Same thing if you get stopped out. Stop out, move on. If you see that your stop was clipped and maybe the trade still looks good, you can always re-enter that later on. Otherwise, just let it go and wait for the next objective setup. So that's it, guys. In the nutshell, we need to take out the lows, yesterday's lows on Amazon, Meta, SPY, and QQQ, just like I said yesterday, to get the next sell signals. Last but not least, IEF. There it is. We are still in my yellow zone, comfortably in the yellow zone. So the stocks right now, see there's a little lift in yields. And that's, concurrent with the little slight lift in the stock market today, but nothing much. And this is, at least as of today, no chance of us getting out of there. So, as I said this morning, in my opinion, again, that's why I do these long-winded videos. It's not that you can short rips, in my opinion. This is just my thing. Do what you want. It's not advice to any one person. In my head, I'm viewing that unless IEF recovers that and gets back in this green zone up here, then you could make a case to short rips into resistance in the markets. But again, kind of active trading or build, but you can't go to a heavy short position, a heavy swing short position until those aforementioned levels I've just been talking about, Meta, Amazon, SPY, and QQQ, are taken out. So again, you can short rips, rallies into resistance, as long as this is here, or at least I will. But let's see what happens tomorrow. Again, between now and tomorrow, there's really nothing to do because days like today, you want to disengage. There's just And there might have been some short-term trading ops, but again, these are days when there's nothing on the economic calendar. You just had the biggest down day in almost a year. The market's going to digest that without any catalyst, either a technical or fundamental catalyst. A technical catalyst would have been had we sliced down through market went down today, and we clearly took out those trend lines. That would be a technical catalyst that could have sent us lower, but it didn't. We held support and we're above support. A fundamental catalyst would have been some economic news or data, and we don't. Again, you can see the economic calendar. And there was nothing on there. So that's that. I'm going to wrap it up here, and we will pick it up tomorrow. If there's anything, there's not a lot to add. You'll see what's happening in the pre-market, but if anything big happens, I'll try to get my thoughts out to you before the open, and we'll go from there. This has been Randy Finney with Right Side of the Chart. Have a great day.